Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day market recap for Tuesday, December 14th. Let's go through. I don't have a theme of the day, but I would say theme of the day probably is, again, like another washout in, some growth stocks, but a little bit of a rebound. I would say also the theme of the day is, I think a bit of short covering at the end of the day, maybe a little bit of buying the dip sprinkled in there too. But I think the main event tomorrow is going to be the Fed meeting tomorrow. Remember, that's at 2 o'clock, and press conference as always. There's a press conference with every one of these meetings. That's at 2:30. So a couple things. Oh, by the way, risk disclaimer in front of you. I forgot to mention that. Make sure that you go ahead and read that. Everything that we're going through here is for information purposes only. But yes, for tomorrow, keep in mind you get the Fed announcement, right? They're going to talk about they'll release their statement of what their expectations are about inflation and the economy, and what they're thinking in terms of tapering. That will be at 2 o'clock, and the market will react to that. You'll see things like bonds move, the U.S. dollar move, gold will move. Gold usually is moves around on the day of the Fed announcement, and then of course equities will move. Keep in mind that initial reaction. Sometimes it is the way that the market ends up going for the rest of the day. Sometimes it's not, because what's more important, it's kind of like the earnings too, the conference call, right? So the press conference, that is going to be the most important thing. You're going to hear more things and more context about what the Fed is thinking. Remember, the last time that we heard from Powell, or where there was significant language, was when Powell was testifying in front of Congress, and he mentioned that they're going to kind of do away with the word transitory. So that comes out, during Q&A type things. So I would be, yes, listening to that. So let's talk about besides the Fed meeting tomorrow, which everybody will have their eyes on for tomorrow. But let's talk a little bit about positioning. I mean, it seems like what we've seen in this market the last couple of days is there's been continue to see unwinding of growth names. We saw for the last week like a piling into low volatility names, your utilities, your consumer staples, your REITs, your healthcare names, right? So now those names have basically are full boat, right? We've seen those names kind of get extended for the amount of money that's basically been going into like a Procter and Gamble. People, they've been rushing into areas of this market, and we can come up with a bunch of other names, but I think this story by now, right? This move has been going on now since the beginning of the month, right? This is not new. So what has transpired? So now I think at this point, now that there's been a lot of pre-positioning in some of these areas and a movement out of high growth stocks, now we'll see if that positioning has been a little bit overkill, right? And again, what I'm referring to is not the retail traders, but the institutions. They're the ones who are pushing around this market and making changes in terms of their allocation to growth and value and low volatility and high beta. So I think that a lot of what Powell is, I don't know what Powell is going to say, but let's take it from what he could say, right? I think if he talks more about tapering, and and he does say that we're going to be raising interest rates due to inflation, how much of that is already priced into the market? Probably a good chunk, unless he's really, really hawkish, right, on the extreme side. But I think if he kind of comes in and doesn't say anything new that we already know, right? They're going to be tapering, right? There's no doubt about that they're going to be tapering. That they're also going to be, basically looking at, I think, I didn't check Fed fund futures, but I think they're pricing in 2 or 3 interest rate hikes for next year. So that's what the market is already pricing in, and that's important. Right? I used an analogy earlier about, I try to use analogies that you're used to seeing in the market. For example, right? I kind of view like, a little bit of tomorrow, like almost like an earnings event, right? Sometimes when the market really wants to get into a name and they think that somebody is going to have good earnings, what do a couple weeks beforehand, right? They start buying the name up, right, in anticipation of a strong quarter, right? Now, if they keep doing that and making the price of a name go higher and higher and higher, once that name reports earnings, it may, and if they come out with blockbuster earnings, the stock doesn't move much because it's already priced in. They've already bid up the shares, 10, 20%, right? So it's all about, that buying the rumor and selling the news, right? So if he comes out tomorrow and says nothing new, right, the market might actually rally on that because it's already priced into the market, right? Now, that's kind of, we talked about if he's super hawkish, right, the market might react to that to the downside. If he comes in and doesn't say anything new, and that's already priced in, you might actually see a rally. Now, if he's a little bit more dovish, then I think that this market could really rally off of that, being that how this market has positioned and the complacency is gone from the market. Okay, so we'll see. That's just some thoughts for tomorrow. It gets much more complicated than that this week. Why? Because it's a quadruple witching week. So, there is a lot of interesting moves that were happening today, and there's going to be a lot of interesting moves this week. Right? It's really difficult to kind of position heavily around, forget about the Fed meeting, but with just quadruple witching. Right? So this is nice. So that's the difficult thing, is it's hard to position around this for swing trading. Day trades can be quite fun, just like they were today. There was a pretty big washout today, and I basically looked to position and day trade this afternoon based on just a lot of overreactions. I thought that this PPI number that came out today, I don't know why it got very little attention, and it was all about. It seemed to be all about the CPI report last week, right? Nobody talking about that the PPI report was going to come this morning. Well, that came in hotter than expected. I thought that was something. We talked about that in Sunday's Tribeca Trade Group macro video. That this PPI report, you can't overlook that, right? And the market reacted to it. So what do we do when we've got all these events? Well, I for one, position a little bit lighter and do look to day trade a little bit more. It's just too difficult to do anything else. I'll give you an example. Right? I was trading yesterday. I was trading Intuit. Right? Intuit looked like a pretty good setup to me. Right? It looked like it was trying to kind of came in here, broke the downtrend line. Once I saw that, and I even gave it a chance. I unwound half in the middle of the day, and then I gave it a chance at the end of the day to come back. It did not. And look at what it did today. Down $29, right? It didn't even give you a chance, right, if you were left in this name from yesterday. And then it got hit another couple of percent. So not only did it gap down, but it just continued to move down. So it's very difficult when you get caught in these names, and what I've been basically saying is just to try to position light. I give a rating every weekend in terms of the TTG macro video, and it's been low. Because I don't know how you can position going into a week like this heavily. Right. So again, it doesn't mean that I've had a good week just because I'm positioned lightly. It's still, when things like this happen, and if you get caught in a couple names, just using this as an example because I unwound this one yesterday, but there's not much you could really do when this happens to you. When you're in a name and it gaps down, right, and then it continues to go further down, right, you just don't have much. There's not much that you could do in the short term. Of course, like if you're caught in this, right, the thing that you should probably do, in my opinion, is, depending on where your stop price is you take it off in the beginning of the day and you just move on. That's what I've known to be the best thing, because now if you were playing like I was in this name for a breakout, well, number one, that was the whole reason for the trade, right? So now you've turned the trade into some type of an investment, and because you don't want to tell yourself that you got this wrong, right? And you don't want to make a trade into an investment. So you take sometimes losses on things that the reason of why your trade in the whole first place doesn't exist anymore, then that you get out of it. And hopefully, if you're positioned lighter in these things, even if you got caught in something like this or one of the other growth names that gap down today, you just kind of have to move on, right, and realize it's part of the game. All right, so that's that. What I am watching for tomorrow is. There are some. I don't know if the end of today was just straight up short covering. One of the things that I said in the midday video was that I don't think anybody wants to be positioned too heavily into this meeting. That means people who have been doing a lot of shorting, they don't want to be big short into this meeting either. So what do? They have to cover, if they've made money on their shorts, they're covering them back. So the one level that I would watch, let me just flip this on so that you could see the exact level. We try to make it as simple as possible, right? And have levels to trade off of. So 46.35, right? That's right around the 20-day moving average as well. That's what I would like to see the S&P stay above. Now, notice that we got almost down to the 50-day moving average. We might get down there again. We want to see that 50-day moving average hold, right? And then we could possibly say, you could see as well on the 1-hour chart, which I always get good levels off the 1-hour chart, but we did break below this. I thought that we had a chance to kind of hold this for the day. We didn't. We continue to go lower, but we're right at like a decision area. Either we're going to get back inside value for the week, right? Or we're going to get rejected here and possibly go down to this VPOC, which this 4576 VPOC here in the S&P futures chart is right around that 50-day moving average. So that's kind of my thoughts, and I'm not positioned heavily for at decision areas. I want to be positioned lighter, and I want to be ready to go based on what we start to see. If we start to see a rally back inside value, I'll be adding more risk, most likely. If we get down to this point and we hold it and start to bounce off that 50-day moving average, that could be another area where I may not necessarily be playing the indices, but I'll be using that to say, hey, well, the overall market is liking that support level, and people are defending it, and they're putting in some some risk back into the market. NASDAQ looks a little bit worse. That is below value. We did take out this 1-hour VPOC, and we're kind of in no man's land, right, for the NASDAQ. The other thing that I would want to see too is a higher low from last week, right? So right now we have that, but one day's not a trend. We broke value today. That's not a good thing, right? The only positive thing that you could say so far is that we've held last week's lows in here. All right. Small caps look atrocious. They are back to the lows. So I think, just like we're looking at the indices here, the S&P, the NASDAQ, small caps, I want to go to the strength. I don't want to go to the weak areas of the market. I know younger traders, they love to go after names that have been really beaten up. They think that they're getting some type of a value, but really what it is it's weakness, right? Weakness is not something that I want to buy. I want to buy the names that have small pullbacks and then get right back to 52-week highs, not spend 3 months, trying to carve out a low. That's not for me, right? And I'll give you a couple examples of some things that I'm watching for tomorrow. I thought Google, again, Google's right at a decision area, but I would rather be involved in something that comes back like this, puts in some type of a hammer type bar. Now it's got to get above 28.93, but I love the fact that this thing got to the lows of the day, and when the market was still going down, right? This name, so this was right around 12 o'clock. We started to come back here. All right, take a look at what the overall market did around 12 o'clock. It was still kind of trying to carve out that bottom, and Google started to move up already. You could also look at the NASDAQ. What was the NASDAQ doing right at 12 o'clock? Right? It still went lower. It actually did not turn until about 12:50, right? And Google started to head up around 11:30, 12 o'clock, and you could see at 12:45 it was already up here. Right, so to me, those are the things that I look for when you have a washout day like this. Is you want to see what names are acting better, right? So that's just one name. Lucid was another name that was brought to my attention in the trading room today. Holding the 50-day moving average, but was up 4% today. So here's a level to trade against, right? And basically, right, that's what trading is about. Is figuring out a level that's being honored and seeing if that level holds. And if it doesn't hold, right, you get out of the trade. There's no predictions here, right? And I see this on Twitter all the time about, how great this setup is and so forth. they're not. They're really not. There's too many times that's used on Twitter as like how great a setup is. Right? To me, what a great setup is knowing where you enter the trade and knowing where you're going to get out of the trade if you're wrong and where you're going to take profits. Right? That's a decent setup. There's no looking at this indicator and that indicator and three other indicators to tell you that that's a good setup. I'm sorry, but that more often than not, that's not going to help you. But so something like this, Lucid hanging in there, Google starting to move up. Datadog was another name that I'm watching too. Again, like we'll have to watch the lows here. I don't like how it's below the 50-day moving average. So, do you see the difference in a couple of these names versus a PayPal right now? Right? Someone said, which is fine. For the day, PayPal had some relative strength. It was up 20 basis points. But do you see that how weak this thing has been? Right? It bounced. Now again, it's kind of similar that it did not take out last week's lows, but there is so much overhead supply in this name. Right? What do you think is going to happen if this thing starts shooting back up? Right? What about all the longs that have been trapped in this name? You think that they're going to hold this thing if it really starts moving back up? No, they're going to be selling it at every time this thing bounces, right? When you have an extreme move down like this. So I've used this one as an example before. There's a couple other ones too, like a CrowdStrike, right? Something didn't look right with this name for a while. Now, again, it's ripe for a bounce, right? And we said this with some names last week too. But there's going to be all this overhead supply up here. Why mess with a name just because it's gone down? Right? It's not cheap, and it's below its 200-day moving average. It's the same thing with C, right? Which is a name that we talked about last week. Right? This name took out last week's lows. That is not a bargain. That means that there's a lot of weakness in this name. Right, so it's going to need time to repair itself. It's going to need time to back and fill. Maybe it rallies, goes down, goes sideways for a little while, and then maybe it could start building. But this is not going to happen in a couple days. So I again would stick with relative strength. Like look at the difference between this and a Palo Alto, right? Palo Alto is holding its own. Again, it doesn't look like I want to jump into Palo Alto here, but there's a big difference, right, between a name that is just strong versus weak and broken down. All right, guys, we'll leave it there. There's going to be a lot more setups to kind of review when you have damage like this in the market. There's definitely going to be some opportunities, I think, that come out of this. But patience is a big thing. This week is not easy to have all these events crammed into 1 week. All right, guys, thanks for watching. Have a great night. See you tomorrow.